Hey everyone, and welcome. So if you've ever tried to build an algorithmic trading strategy, you know exactly what I'm talking about. You're faced with this huge ocean of indicators and tools, right? It's overwhelming. Which ones do you pick? It feels a lot like you're just guessing and hoping for the best. Well, today, we're going to put an end to that dilemma.
You know, it all boils down to this one simple question. In that massive toolbox you've got, which of those indicators, which of those building blocks are actually pulling their weight? Which ones are giving you a genuine edge, and which ones are, well, just noise?
Let's be honest. Most of us, most of the time, are just guessing. We pick our old favorites, or maybe something we read about in a forum, and we just cross our fingers. But here's the thing. Building a solid strategy isn't about luck, it's about engineering. So today, we're going to stop guessing and start proving.
Now, the reason guessing is so dangerous is because of this sneaky little trap called selection bias. See, when we cherry-pick our favorite tools right from the get-go, we're already biasing the results before we even start. We're building on a flawed foundation, and that is a huge reason why so many strategies that look incredible on paper just completely fall apart in live trading.
So, how do we get out of this trap? Well, the answer is a really powerful technique called Monte Carlo Screening. Now, I know that sounds super complicated, but trust me, the idea behind it is incredibly simple. We're going to use randomization to force our building blocks to prove their worth in a fair, completely unbiased competition.
Okay, let's dive into this. Here's the four-phase process we're going to walk through to scientifically prove which building blocks are worth your time. First, we're going to define our goal and figure out how to measure performance. Then, we'll analyze all that data. And finally, we'll use what we learned to improve our final strategy build.
All right, first up, phase one, define and measure. I want you to think of this as setting up the rules for a completely fair race. We're creating a level playing field where every single one of our tool sets gets an equal shot to show us what it's got, with absolutely no favoritism.
And the goal of this race? It's crystal clear. We want to find out which specific groups of building blocks, which families of indicators, statistically lead to better strategies. And I'm not talking about by a fluke. I mean with cold, hard statistical proof.
So we start by organizing our tools into logical teams. Just like you see here, we could group all of our trend indicators, like moving averages, into set A. Then we put all our oscillators, like RSI and stochastics, into set B, our volatility measures into set C, and so on. Pretty simple, right?
Now, to keep this race fair, each team needs its own lane. So, in your strategy software, you're literally going to create a separate, isolated project for each set of blocks. This is super important because it ensures that when we test set A, only trend indicators are in the mix. They can't be influenced by anything from set B or C.
Okay, with our projects all set up, it's time to put them to work. This is the Monte Carlo part of the process. For each of these isolated sets, we're going to randomly generate a whole bunch of strategies. We're creating an entire population of strategies built only from that one specific toolkit.
And when I say a whole bunch, I mean it. We need a statistically significant sample size to trust the data. So we're talking about generating something like, say, 1,000 strategies for each set. This gives us a really deep pool of results to analyze.
Now, this next part is absolutely crucial, maybe the most important step of all. You have to resist the temptation to add your usual filters. No minimum net profit, no maximum drawdown, nothing. We have to let the generator run completely wild. We need to see the raw, unfiltered potential of each block set. If we filter now, we're just injecting that same old selection bias right back into the process.
All right, so once our thousands of strategies have been generated for each set, we do the last step in this phase. We simply export all of the raw performance data for every single one of them. And just like that, we have our raw material, a mountain of data points ready for analysis.
Okay, let's move on to phase two, analyzing the results. This is the exciting part. This is where we take all those numbers and turn them into real, actionable intelligence to find our clear winner.
The main tool we're going to use here is a statistical test called a One-Way ANOVA. And again, don't let the name scare you. Think of it like a statistical bake-off. It's just a systematic way to compare the average performance of our different groups. It tells us, with confidence, whether one group's results are genuinely better than the others, or if the differences we're seeing are just due to random luck.
So in our bake-off, the setup is super simple. The factor, that's the thing we're testing, is just the different building block sets, the trend group, the oscillator group, etc. And the response is what we're measuring, the performance metric we care about, like the compound annual growth rate or the Sharpe ratio of the strategies that were produced.
And this right here, this is the payoff. Your ANOVA test might spit out a chart that looks just like this one.
It's a clear, visual answer. It could show us that, on average, the strategies built using trend indicators had a statistically higher fitness score, a measure of overall quality, than the ones built with oscillators or volatility tools. And just like that, we have found our winner.
And that brings us to the final, and honestly, the most important phase. Improve the build. We've done the science, we've got the statistical proof, so now what? How do we actually use this incredible insight to build way better, more robust strategies from here on out?
Well, the takeaway is actually incredibly simple but so powerful. You make a new rule for yourself. From this day forward, you only build your final refined strategies using the block sets that were proven winners in your test. You can now confidently, completely remove the underperformers from your process, knowing you are starting your build with a quantifiable, data-driven edge.
And this really gets to the heart of why this whole thing matters so much. This process isn't just some neat academic exercise. It is a practical, repeatable method for changing the way you build. You're shifting from a process based on hope to one that's built on a foundation of solid, statistical proof.
So, I'll leave you with this one final thought. By taking the time to scientifically test your tools before you use them, you're making a conscious choice about the foundation you build on. So the question really is, why would you keep building your strategies on sand when a method like this lets you build them on solid stone?